Welcome back, students who are taking financial accounting, and in this series of videos we are working on the assigned homework problems from the digital study guide for chapter 10, the group B exercises. Come on, next slide. Here we go. Note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you don't understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. Okay, so let's see, we did 40. All right, now we're on 41. Okay. So it says accounting for treasury stock, journalize the following transactions. Okay, so we have March 4th. We're going to issue 20,000 shares of no par common stock at $10 per share. Okay. We're getting cash for the stock, so we're going to debit cash, and it's 20,000 shares at $10 a share. So 20,000 times 10 is 200,000. And we'll credit, what are we getting? Common stock for 200,000. It was just that simple, okay? Because we're issuing the shares of common stock. All right, May 22nd, we're going to purchase 1,500 shares of treasury stock at $6 per share. Okay, so if we're purchasing, we're going to spend money, so we're crediting our cash. 1,500 shares at $6 is $9,000. And we're creating treasury stock, so we debit our treasury stock for the $9,000. Just that simple. Okay. And on 9/22, we're going to sell 600 shares of treasury stock at $9 per share. Now remember, we bought it at $6. Now we're selling it at $9. Okay. So if we're selling the treasury stock, that means we're going to get cash, and we're selling it at $9 a share. So debit our cash for 600 shares at $9. 600 times 9 is 5,400. And we credit treasury stock, right? And because that's what we're selling, but we're selling 600 shares at a par value of $6, which is 3,600. 600 times 6. And of course, we back into the paid in capital in excess of par. So we credit the paid in capital in excess of par. The difference between the two is $1,800. Okay. If you didn't understand that backing into, go back and watch the videos for the exercise 10-38 or 10-39. Or watch the theory videos, and you'll see my explanation. I think it was 10-38. Well, let me jump up real quick. No, okay. That's declaring a dividend. Yeah, 10-38. I just give a little bit more detailed explanation of that, of how I back into a number instead of doing all of the calculations for it. Okay, so that's it. Simple as that for this exercise. We'll move on to the next one. Okay, so it says here, accounting for treasury stock. Here's the stockholders' equity. On December 10th, Frontier purchased 2,000 shares of treasury stock at $13 per share. So journalize the purchase of the treasury stock. So on December 10th, we are purchasing, right? So we're buying stock, so we're going to credit our cash. And 2,000 shares times 13 is $26,000. And what are we getting for it? We're getting treasury stock for $26,000. Just that simple, right? Same as this one up here. Okay. Now pause the video if you have to, because I'm going to erase this and write down that transaction. Now, instead of rewriting the whole stockholders equity section here. I'm just going to write over the information. Right? It says prepare the stockholders equity of the balance sheet. Now remember, we just got done purchasing. We just got done purchasing $26,000 of treasury stock, right? Okay, so what changes here? All right, so common stock is $4 par, 500,000 shares authorized, 90,000 shares issued and outstanding. All right, we're buying back the common stock, so 90,000 shares are issued, but we don't have 90,000 shares outstanding. So what will happen here is this will change, and I'd make this 88,000 shares outstanding. All right, so I'd change that. So it would read common stock, $4 par, 500,000 shares authorized, 90,000 shares issued, 88,000 shares outstanding. All right. Now we do it that way because we can sell that. We bought the treasury stock. We can sell it. So we would still affect our common stock and have it show what is still outstanding. The number of shares issued is going to stay the same, but what's outstanding is what's available for sale or buying, for lack of a better way of putting it. So 88,000 shares outstanding. Now, the only other change that needs to be made here is to account for the treasury stock itself, right? So right in here, okay, the line item would look like this: less treasury stock, and then it have 2,000 shares at cost, and that would be $26,000. Okay, so I'd have $26,000 right in here. I disagree with the author in how they wrote it. They wrote it as a negative 26,000 here. And if you go back to the very first chapters in creating the financial statements, you see me make the argument that when you write the word less, that means minus. So if you have a minus and then you have another minus by being in brackets, mathematically that's a plus. A minus times a minus is a plus. All right. So basically saying less treasury stock and then having a negative 26,000 says, oh, I'm going to add it in. All right. But so I disagree with writing in the brackets here and making this a negative 26,000. It should be a positive $26,000. Okay, so that's what is written right in here, and of course that changes the total amount to $1,334,000. Okay, so that would be the change that I'd make to the stockholders' equity section here. Okay. All right, let's see. Can we do one more? Balance sheet disclosure. Prepare. Okay, I'm going to pause here and work on this exercise in the next video. So yeah, if you didn't understand anything on these two last exercises, go back and watch 10-38B, and if you have any questions about how to create the stockholders equity section, then take a look again at the theory. But remember, with stocks and dividends, it's you watch the theory, you understand the concept, but the more you do it, the better, the easier it becomes, because of the different variations that you can have. And so this here is just another variation on the theme. As long as you understand what the stockholders equity section looks like, you're just making adjustments to it, okay, depending upon the situation at hand. Right, so if you have any questions, feel free to telephone and speak with an instructor, and I'll see you in the next video.